It's Sunday, it's the weekend, just the day before Monday. So let's see what we can expect for tomorrow, for the coming week, for Bitcoin, for the general market. So first of all, let's go into Bitcoin. The first thing we have to always talk about on the weekend, every single time, is the CME gap. Because these things are formed over the weekend. It's the price movement that Bitcoin makes over the weekend, Saturday and Sunday. And whatever the price movement is, if it goes $2,000 up over the weekend, Bitcoin will then go again down $2,000 most of the time. It will always fill that gap. So, for example, look, we had a CME gap last weekend here, and this gap is still open actually. It's at all the way up here. So on Friday, Bitcoin was at 84,000. And then here on Monday, Bitcoin went down to 78,000. And these gaps tend to be filled. I want to show you guys, first of all, how these gaps are filled. So first of all, for example, here, there we can see a gap. We can see a gap right here, right? This is a gap, and let me mark it for you guys. This gap was filled Friday to Saturday, and then it went back up, and right about here, we filled the gap, right? If we go back, we have another gap that's open here, which is about to be filled. And other gaps that were filled, for example, this one here, it was filled right here. And then if we go back, you're gonna see a lot of these gaps being filled. For example, there's a gap here that was filled there. There's a gap here that was eventually also filled here. You can see it was filled. You can see the gap is filled right here. And these gaps are filled. So firstly, where's the gap right now? Without talking too much about these gaps. Well, Bitcoin on Friday is at $70,580. You can see here, it's not moving. It's basically frozen as of Friday. And come Monday, whatever the price is tomorrow, we're gonna open. So what is the price right now? Well, I've marked it for you guys. The price right now is around $71,000. So it's not really far. We're just $500 above the price. Therefore, most likely what I think will happen, if we don't do this overnight, because $500 is not much for Bitcoin, you can do this within a few minutes, we're gonna go down, fill this gap at $70,550 approximately, and then we will probably go up, in my opinion. Why do I think we will go up? Well, first of all, we have still the CME gap here at $84,000. So this is basically a magnet which is pulling us in this direction. And I think we're gonna fill this very, very soon. That's an insignificant gap. And it's actually a good thing that over the weekend, I'm very happy if Bitcoin is boring. I'm very happy if Bitcoin just goes sideways, because then come the next week, Bitcoin is not tied to a CME gap. It can actually move on its own independently. And so we have not moved much. This is good to know. Next thing, let's look at the liquidation heat map. Liquidations is the price point where traders who use leverage, at which point are they liquidated? Where are their positions liquidated? And usually that's also a magnet. So we have two magnets, the CME gap and the liquidations. And liquidations currently are above our price. So we have a lot of liquidations here, the yellow line at 72,000 approximately. And then you can see a lot of liquidations here at around 80,000. This means that most likely we're gonna fill these liquidations. So I think we're gonna go back to around 72,000 and potentially go up to 80,000 as well, which will bring us close to our other CME gap. Now let's look at the general market. That's enough for Bitcoin. Let's look at the market. So we have the S&P 500 right now, and people are speculating that we are going to go into a recession. And you can see kind of a pattern forming here. Let's zoom out, and the pattern I want to show you guys is basically that the price is going up. It's forming this kind of, you see, it's forming this kind of top wedge, and then it's going down. Same thing here, it went up, it's consolidating, the price has less volatility, it's consolidating to a small edge of the triangle, and then it's going down. Same thing right now, we can see it's consolidating, and then it might go down here, and I think it will happen. Let's see how much further we can go sideways. You can see the momentum, it's like, it's not exponential, it's actually consolidating. It's becoming less and less exponential as we go up. And one thing we can talk about in the general market wise, for example, is the job openings. So the US has right now very little jobs available, and over the last 2 months, job openings have declined by $907,000, which is the biggest 2-month drop since March 2023. So currently the available of vacancies have plummeted 5.6 million since the peak in March 2022. And this chart basically shows us the job openings per unemployed worker. And you can see they're at a low right now over the last few years. And when were they at a low the last time? Well, they reached a low whenever there's a recession. Obviously, when there's a recession, there are less jobs available. And we can see here in 2020, when we had the COVID pandemic, we had a low. Also in 2008, 2009, when we had a recession, we had a low. And also in 2000, when we had the dot-com bubble. So all of these gray areas are recessions. And going down is usually not a good thing. It's not a good thing for the economy. It means we are not doing that well as companies scale back. And as we go down, it's just an indicator that things might go badly. Next thing, we can talk about this. And this is the US debt crisis. We know that the US has, I think, $39 trillion of debt right now. And a lot of investors, they buy US treasuries. And as these expire, the government has to pay them their interest. And this is basically the interest payment that the US government has to make. I think they have to make about $9.1 trillion in treasuries are being held, and they need to be repaid to investors. So interest payments for the US government are going up. And this will just bring them more into debt. So what they can do is either print more money, or they can lower the interest rate to make it cheaper for them to pay back the debts. So we can see right now the debt that the US government has been accumulating has been growing steadily for a very long time. And right now, again, they're at a peak. And this is, of course, not a good thing at all. We've seen the US government shut down as a result of this, and as a result of misunderstandings on where to allocate budgets to. So this is also not a good thing. The debt, he said, the unemployments are not a good thing. And next thing we can talk about is gold. So lastly, I want to talk about gold, and we can see that gold is doing very well. Actually, the gold ETF, which is the largest gold ETF, the ticker GLD, is up 34.9 million troy ounces. And big gold has obviously gone up a lot. And we can see the ETF, so the holdings, people that have money in this ETF, it's reaching very high prices at the moment. And let's look at gold. Gold has actually gone up massively, all the way to $5,400. But from the peak, it has now gone down 10%, but it has already gone down 20% at the most when it crashed. We know that about a week ago, gold and silver and commodities crashed heavily because they were just super hyper overestimated and the price was way too high. And we can see kind of there's a pattern, right? We go up and we go down, and I think that gold can recover, and we can see kind of recovery here. How do I know we have recovery? Well, let's look at this. If the price is finding support, if the price is here and then it's going down and finding support, so people are actually buying, because people start buying, the price doesn't go further down. This means we have found a price where there is enough demand for the price to not go lower. And this is usually a good thing. We don't want to be buying here. We don't want to be buying when the price is going down. We always want to be buying when we start going sideways, when we know that, okay, it looks like we have reached the bottom. There are people that are willing to buy now. If you buy while we are falling, you never know when we stop. So we can buy here, but we can keep going down. We can buy here, keep going down. Always buy the dips at support levels where we go sideways. Okay, just an idea for you guys. And we can see we have found support. It looks like we might be going up again. Same thing here. Look, we went down, we found support, and then we started going up again. We went down, now we're finding support. It's very volatile. The candle bars are very large, but it looks like we might continue to go up. Last thing to talk about. Next week, there is a decision on US crypto regulations. So basically, it's about stablecoins. And banks, they don't like yields on stablecoins. So what does that mean? If you have USDT, for example, Binance could pay you 3 to 4% on your holdings for stablecoins like USDT, USDC. And this is directly competing with banks, because if you hold dollars in the bank, a fiat currency, you're getting a yield, right? You're getting a small yield. Now, if you can also get a yield, and often a larger yield, by holding stable coins, this is directly competing with banks. And banks don't like this because the money will go out of the banking system into the crypto system, into cryptocurrencies. And I understand that, of course, they don't want that. So what we have to do is have clear regulations on stablecoin yield. Now, giving too much, because it's of course also money, because you can sell your USDT for dollars, these stablecoins need to be regulated. If Tether, who manages USDT, just pays 10% interest on your holdings of USDT, and then you convert it into dollars, suddenly the amount of dollars in the system is gonna double, is gonna go up way more, and it's gonna cause inflation. So of course we need regulations on stablecoin yield, because you can convert your USDT into dollars. And if you suddenly get more USDT from your interest and then convert it into dollars, there's going to be a lot more dollars in the system. So it is competing, but there should be good regulations. And there's a meeting coming on the 10th of February, which the White House is meeting, focused on stablecoins and the broader crypto market structure bill. So that is a good thing. So overall, I think we're gonna go up for the next week. If you ask me, we're gonna go up for Bitcoin. And it's a good time to buy right now. It's a good time to buy at lower levels. It's a good time to buy at higher levels. But please, my recommendation is buy every month. Buy as you get your income. Keep buying some more Bitcoin. See you guys next time.